Ooh, what's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades, home of your trading BFF and your stock market bestie. There's a new kid on the block. There is a new EV last mile delivery company coming to market. This is the newest last mile delivery to make the attempt to become publicly traded. This will be a direct competitor to Workhorse. So in today's video, we're going to be breaking down this new EV stock. We're going to talk about the company, and we'll talk about whether this is a good investment in my opinion. Is it too cheap? Is it too expensive? And we will compare it to Workhorse. We'll compare it to the Stallion, and I'll offer my opinion on which is a better investment. Is this new EV stock that's about to go public via SPAC a better investment? Is it a better deal versus Workhorse? Or is the Stallion a better long-term investment? If you're new to the channel, this is Touchdown Trades. We talk about the hottest stocks in the market every single day. So go ahead, take your two fingers, dust them off, and go ahead and jab that like button. Give it the old Touchdown Trades snake eye jab in the eye. We haven't jabbed the like button in the eyes in a minute. Also, if you haven't yet subscribed, hit that subscribe button. What you waiting on? All right, guys, let's break down this new EV stock in the last mile delivery sector. Let's get it. All right, let's break down this new EV last mile delivery stock. But before we do, check out the link in the description after the video for Webull, offering not one, not two, not three, but 4 free stocks. When you sign up with my link and deposit $100 or more, you will get 4 free stocks valued up to $1,600 in literally free money. You can't beat that deal. Look at this platform. I mean, it's an awesome desktop platform. These charts are sharp. The platform is sharp. Check out that link after the video. The ticker, the SPAC that this company is going to be merging with is FIII, Forum Merger. And the company that it's going to be merging with, the real company here that's going to market, is ELMS, Electric Last Mile Solutions. So they don't hide anything with the name there. This is a last mile delivery company, and it is going to be a direct competitor to Workhorse. We can take a look at the vehicles here, and it is a Class 1 van. So it is a little bit smaller vehicle. Workhorse offers a Class 2 truck or van, whatever you want to call it. We can see the smaller footprint there, but there's no doubt about it. This is going to be a direct competitor to Workhorse. Here is here's another picture of the van down here and some specs on it. It looks like a Ford Sprinter or any other last mile delivery van, right? It is not a bad looking delivery vehicle. And here's the specs. So if you have one of these vehicles in your fleet, it's gonna save you $7 per day, and you're gonna save 2.9 gallons of gas per day. Let's take a look at the merger real quick, and then we'll break down the company. So the deal will have Electric Last Mile Solutions merging with Forum Merger. This will also result in FII stock changing to ELMS. So the ticker symbol post-merger will be ELMS. Also, so let's get to the spicy stuff. The market cap is going to be an implied market cap of $1.4 billion. This will give Electric Last Mile Solutions net proceeds or gross proceeds of $379 million, which I imagine that they will use to cement that manufacturing, the production process, maybe get a plant. I heard they have an old Hummer plant that they're planning to do manufacturing in. All right, now let's take a look at the vehicle. Designed to be the most efficient and reliable electric last mile solutions. All right, so here we have the EV urban delivery van. Our new urban delivery vehicles have a class leading 170 cubic feet of cargo capacity in a range of 150 to 200 miles. So that range is plenty of range to be efficient in the last mile delivery space. Designed to offer the lowest total cost of ownership compared to gas Class 1 vehicles. And that's a huge deal, right? Because when you're marketing to these fleets and you can say, hey, look, every vehicle you buy from us, you're gonna save X amount of dollars versus your current vehicles, that's a big deal to these fleets. Their sole job is to make money. As a business owner, your sole job is to make money. And if they think this company can offer them savings and help them to be more profitable, then what's not to like? We can see that they're claiming that 35% savings, 60% maintenance cost reduction, and this is a huge deal right here. 35% more cargo space than the current Class 1 leader. So if they can go to these fleets and say, look, you're not only going to save X amount of dollars every single day or every single month or every single year with our vehicle versus your current vehicles, but you're also going to have 35% more space per vehicle, which will allow each delivery driver to be more efficient and to hit more deliveries per day. And I think that's going to be a huge selling point. The executive team here for this company, they're no chumps. They're legit. This Jason Taylor, founder and CEO, is a big deal. He spent more than 30 years at GM, serving as the president of Cadillac. That is a huge deal. And the CEO of Hummer. He was there when Hummer was legit. Now Hummer's kind of just a sideshow spectacle. But if you remember a few years ago, maybe 10 years ago, Hummer was legit. There were a lot of Hummers driving around, and he was the CEO of Hummer during that time. Here are some critical checkpoints that the company is mentioning on their investor presentation. Short lead time to launch Q3 2021. The plant in Indiana retrofitted for EV production. That was the old Hummer plant that I was mentioning earlier. That is where they're planning on doing their manufacturing. Vehicle and plant 90% ready for US production. Access to trained workforce of over 400. That is a big deal. Having people who know what they're doing, employees that know what they're doing in place, is a bigger deal than people give it credit for. Existing and reliable commercial EV product. First OEM to US market with an EV urban delivery vehicle. I kind of question that, as Workhorse vehicle is a Class 2, but it is very similar, right? In size, in storage, it's not that much different. This is a huge deal right here. So strong customer demand and 30,000, keyword 30,000 pre-orders. That is a huge deal. They have 30,000 pre-orders from some pretty impressive customers. Walmart, Merchants Fleet, FedEx, IKEA, Ryder, Best Buy. So some pretty legit companies buying vans from this ELMS. Here's that marketing tactic that we were talking about earlier, the cost of savings versus traditional gas last mile delivery vehicles. So here we have the competitors and here we have ELMS. So they're saying that you're going to save, the current Class 1 leader is this middle line, and you're going to save $19,000 over the life of the vehicle per vehicle. That is going to be a huge selling point. And on top of that, they can say, look, you're going to have X amount more space per vehicle too, making your drivers more efficient, making your vehicles more efficient. And I think this vehicle does look good. It's a good looking van and the specs are really good. Here we have a timeline, short time to market with concurrent engineering. They're saying they're gonna get to market with these 30,000 pre-orders by Q3 of 2022. And they say they'll be positive cash flow, but like Q3 of 2023. So they're gonna be positive cash flow by their projections by 2023. That is a pretty big deal. And we'll see if that can happen. If that can happen, then this company, this stock, is looking pretty tasty. Here we have a diagram comparing this vehicle, the ELMS vehicle, to your gas Class 1 vehicle. So they say the total operating cost per year for this vehicle is only $1,500, while your traditional gas vehicle is going to cost over $4,000 per year. That is a huge deal, and that is a huge marketing point. All right, let's take a quick look at the projected revenue. 2020, no revenue. 2021, a little bit of revenue, $120 million in revenue. By 2022, they're expecting $600 million in revenue. And then here where we get to the real numbers, 2023, $1 billion, 2024, $2 billion. And this is looking real good. If they can hit $3 billion in revenue by 2025, this company is undervalued right now, no doubt about it. It needs to double in price, right? But that's a big ask. You're talking about $3 billion in revenue. They're saying they need to hit 83,000 vehicle sales that year in order to get $3 billion in revenue. We'll see. We'll talk about my opinion in a little bit, but that is a tough task to hit. But they're saying they think they can do $3 billion in revenue by 2025. That would give us a 400% growth in 2022, almost 100% growth in 2023, and then 60% plus growth in 2024 and 2025. All right, let's take a look at the chart real quick. I'll offer my opinion on whether this is a good investment or not, and then I'll talk about whether I would rather invest my money in Workhorse or this ELMS. So, is this a good investment? Is this a good deal at these levels? I think absolutely it is, because the downside risk is really non-existent. The maximum downside risk we have is back to $10 a share, really, and we're currently trading at $11 a share, so about a 10% risk, and I think the upside is there. I think we have $20 potential by the next 12 months. I really do. If they can hit those benchmarks by 2025, this stock is doing $3 billion in revenue. It is extremely undervalued if they can hit those benchmarks, and the risk is really non-existent. If we go back to $10, you take a 10% hit, so your risk is 10%, and I really think it has huge, maybe even 100% potential upside if you hold it long term. We've seen what the recent SPACs have done in the EV sector, so it's not crazy to think that this stock could run up huge early pre-merger or post-merger, and especially if they can hit those revenue numbers. All right, so would I rather put my money in Workhorse stock or this ELMS stock? And the answer is both, probably, but if I had to choose one, it would be Workhorse, even though I think Workhorse is higher risk at these levels, because Workhorse, if they don't get any of the USPS contract, they're going back down to maybe even $6, $7, $5 a share. The other stock that we just went over, ELMS, if they crash and burn, they're going back to $10 a share. But Workhorse has more potential long term. And I really don't care. I can hold through a crash. I don't care. I'm not over leveraged. I can hold my Workhorse position through a crash. And I think long term, Workhorse realizes they need more than one revenue stream. You're never going to be a $20, $30 billion company just selling these last mile delivery vans. Workhorse has Horsefly, their drone delivery system that can offer a second revenue stream. And I'm really excited about this Metron. It's fleet management, so you get software as a service, reoccurring revenue. When you sell a van, you're not only stopping there, you're trying to squeeze more lemon juice out of the lemon, get the most amount of money from each customer, optimize each customer sale. That's how you get that reoccurring revenue, and that's how you become a huge company. That's why I'd rather invest in Workhorse, but I don't only have to choose one, and I'm considering opening a position in this FIII. Real quick, I'm really considering it. I think the risk to reward ratio is very good, and I'm really taking a hard look at investing in this stock. All right, guys, I hope you guys got something of value from this video. If you did, hit the like button. If you haven't yet subscribed, subscribe. And check out Webull, link in the description. Deposit $100, get free money valued up to $1,600. All right, guys, catch you on the next one. Until next time, peace.